AMC's share dilution might actually be a double-edged sword in disguise. It might actually help the hedge funds, or in my opinion, the market makers, short AMC even worse. You'll not want to miss this. But first, a word from our sponsors, and that is Citadel I'm just kidding. Although a Dollar Shave Club sponsorship wouldn't be too bad, but until that happens, this video is sponsored by me and that big free red subscribe button down there, along with the blue like button and the comment bar down below. Actually, having said that, if I hit 1,000 subs in the next 3 months, I'll actually invest $1,000 of my own money into AMC. If you are a shareholder since June 2nd, you should have gotten by now a proxy statement as well as a proxy vote for AMC. All right, so I'm going to skip the semantics of it, and I'm going to go straight to where I see something that's kind of interesting that you guys should really consider about when you guys are voting for this thing. So while I'm going through this, I want you in your head to digest the information, but also think of other ways that if you were on the other side, how would you screw over the people who would vote for this thing? And if it was to happen, how would you screw them over, right? Because again, there are a lot of double speak in a lot of these filings that you kind of have to rationalize and think of, is this a possibility of? But, let's begin. So, letter from the CEO. Dear fellow owner of AMC, thank you for investing in AMC. Only the owners of AMC get to vote on the matter that are critical to the success of our company and value of our shares. So please take this time to exercise your right to vote and protect and enhance the value of your investments in your company. The ask, you're being asked to read like, sir, no one cares about that, blah, blah. Let's skip to where I want to. Propose to increase our authorized share capital by 25 million shares. This does not mean those shares will actually get issued, and in any case, they cannot be issued until 2022. Allow me to take a few moments to explain the rationale behind the proposal to increase our authorized share capital. AMC may face challenges and uncover exciting opportunities as we emerge from the impact of COVID-19. To successfully navigate the road ahead, we need to assemble all the tools that might help us, and an important tool for any company is having shares available to issue if the right opportunity arises. We would only consider issuing our precious shares when we believe that doing so will enhance the value of your investment in AMC. This is an important request given at the moment we essentially have no shares left for future issuance, only 46,124 to be precise. We are requesting an additional 25 million shares to be able to for possible issuance in the future should the right opportunity arise. This represents less than 5% of our issued capital. It is also fully 95% less than most of the recent stockholders authorized more shares, blah, blah. We've been carefully listening to our shareholders. Okay, so here's some of the more important stuff. And I'm hoping you're still kind of like digesting this information and thinking, okay, well, if they were to issue this, what's the good and what's the bad? The good right now, before I go through the rest of this, the good is that they're trying to raise more capital, right? So if they were to do it right now, right here and now, if it was possible, if it was 2022 and it was at the current price at right now, I'm thinking they might just do an at the money offering, and that would raise them about 1.5 billion, which would actually put their available cash balance over 50% of what their current debt is. Now, again, I want you to think of ways not just how it benefits the company, but how, if you were on the other side, if you were trying to screw over the retail investors, how would you do it, right? Now, consider some of the situations where it might be beneficial to use shares in the future to create value for our stockholders. We have opportunities to use shares to reduce our debt, again, like I mentioned, and reduce or eliminate the associated interest costs. We may be able to generate cash to be used to invest in our theaters, acquire new theater leases, or invest in other attractive growth opportunities and thereby enhance the value of our company. Again, this is a kind of like a nitpick argument, but like I'm wondering why they never just, buy up the entire lot of the mall location and stuff like that. And this was done back in my old hometown where there's a huge mega mall. And what the property owner did was that they basically sold off sections of that mall to build a whole ton of condos. A lot of people wanted to live in those condos because it was really close to this mega mall. It was like the biggest mall in town and everything, right? And those condos, I think they came out at least, this was before like the super inflation and stuff, but I think they came out at least like $500,000 for like a 1-bedroom apartment or something like that. But we may be able to use shares in exchange for cash rent reductions that will improve the profitability of our theaters. Again, going back to the property argument, why don't they just buy up the lot, build the theater there with and then rent out the other spaces for like whatever things that they want, or maybe you just build housing there. If they own the property, I mean, they own the property, right? They don't have to pay rent, and they have probably like a really close amount of clientele that they can cater to. We may be able to use shares as currency for attractive merger and acquisition opportunities. Again, I don't know who they would acquire, but we may use shares to raise cash, but only if necessary to bolster liquidity or ensure our survival in the event that the anticipated return to a normal box office theater environment takes significantly longer than expected. Some of you may be concerned that the approval may dilute your stock holdings. I can assure you that this is very opposite of our goal. Again, that's not the definition of a dilution, but sure. Remember that an increase in authorized shares does not increase the number of shares that are issued and traded in the market. And the new authorized shares that we are requesting cannot even be considered for issuance until 2022 at the earliest. Again, they're going to issue more shares, but they're going to keep it in their pocket for now until they see an event where they can raise or generate a lot of capital. But that's still an underlying concern. Just because they have it doesn't mean they're not going to use it, right? They're literally listing the reasons for you why, like if these things come up, we're going to use it, right? They're just saying that they're trying to keep you calm right now until the next year when they can actually, have it tradable in the market. The best way to protect and grow stockholder value is to ensure that we have the tools to successfully navigate the road ahead, and we are much better equipped to fight the fight if we have the flexibility to issue shares. AMC directors, management team, blah, blah, none of that matters. Now, I'm hoping that you are keeping good notes, but if you haven't, these are mine here. And one of the first points I have is that essentially when they are, again, he said that he's not going to be issuing them out yet, right? Those are not tradable, at least not until 2022. And to me, that sounds like he's just kind of kicking the can down the road to raise capital. Again, not a bad thing, but it's sort of like a looming issue there. The other issues I take is that he mentions that this isn't a dilution, these shares are not tradable and stuff like that. Well, when you do issue it out, that is a dilution. Like that is the definition of a dilution, right? And that will hurt your stock value. From an institutional point of view, and from what I understand from retail investors, I think that if they were to issue, like, let's say 1 million shares next year, right? If AMC is at $10 next year, theoretically, let's say that it's at $10, I think that the public market, the retail market, can snatch that up pretty quickly because it's just $10 million, right? But if it's at the current price right now, let's say $60 or even higher, that's $60 million. I don't see the retail being able to snatch it up that quickly. I mean, I could see market makers, institutions just eating it up just like that, just really quickly. But I don't see the retail being able to do that. And this kind of like opens up another issue that I have that I know about the retail investors, and that is having to do with margin. And I think that with a high stock value price, I think they're more encouraged in today's environment to possibly go into their margin, which again, most people don't understand what a margin call is because they've never experienced it yet. They've only seen it from a distance and think that it can't happen to them. I'm telling you, it can happen. But again, that's what I'm seeing from an institutional point of view. If they were to, start issuing shares again. And again, if you guys are holders of AMC, because they issued those shares, your shares suddenly become worth a little bit less. On top of all this, and this might be the biggest point of my video also, is that if they were to issue those shares at any point, the biggest issue nowadays is that people are having with what's illegal, which is naked shorting. Well, this would actually open up more legal shorts to the market and to AMC specifically. So my final thoughts and comments and where I stand on this is that there's no right answer to this. AMC has capital, and they're trying to gain the ability to raise more next year. But I just don't like the fact that he kind of worded this in a sense where he said that, this is not a this year issue because we can't issue those shares until 2022. He's essentially kicking the can down the road to what's inevitable, which is share dilution by them issuing these shares. And by them issuing these shares, they open up the opportunity for these funds, market makers, whatever, to actually be able to legal short sale the stock. But in doing so, some of the positives is that it also provides better liquidity. The stock becomes slightly more stable, less volatile, and you won't see the crazy up and down swings. That's a possibility. Again, it's up to you to decide whether that's a good or bad thing. But at the end of the day, I'm not telling you how to invest or how to vote, but you should really consider the pros and the cons before making a decision. But the most important thing you should really consider is that just because you're a day trader doesn't mean you have to trade every single day.